what's going on, everybody? Chris Franks with Texas West Capital coming at y'all live here just after 11 a.m. Central Standard Time on what is today, the 14th of August. That's a Wednesday. Wednesday means Beards and Bitcoin with my friends Andrew and Tillman coming up here in just a minute. And hopefully you guys are excited. As usual, we've got lots of stuff to talk about. We're going to touch on the Goldman Sachs 13F filing. We'll talk about, well, real quick here, let me just say before I pull the guys on here, a lot of people are concerned about maybe that the top may be in this cycle. We talk about this and we've kind of looked at different reasons why it's likely not. I just came across an article that mentions from Glassnode that mentions that 45% of the Bitcoin supply has not moved in the last 6 months, folks. So, what does that tell you? That tells you what they had is the long-term holders, which were the 155 days and older, were selling into the all-time high as they always do. But they've stopped selling now, and they're starting to get back to their accumulation. And during that time, though, 45% of all Bitcoin have remained dormant in their wallets for at least the last 6 months. So, and here's the other crazy thing. According to the article, fewer than 1.7 of trading days, 1.7% of the trading days have ever recorded a larger distribution pressure. Which is crazy because we didn't really go that far, guys. Think of what it's saying there. We've talked about this before on here, about the fact that, excuse me, that you get that those long-term holders distribute into the new all-time high. And here they're doing it at a significantly increased rate. And what happened? We got just what we hadn't gotten yet, which was the 30% or whatever pullback that we get every halving cycle. So really something to kind of pay attention to there if you're really kind of scared of what's going on there. Let's go ahead and join here. We've got Andrew and Tillman coming in. How are you guys doing today?
Doing great.
Doing fantastic, man. Thanks for having us. We love doing this.
Man, I'll tell you what, it's become the highlight of my week, honestly. And I know we continue to get really great feedback from people that are watching it. They love you guys. They love the info that you guys are bringing, and they, the shirts that Tillman brings on and wears and shows his personality all out there. I mean, it makes life worth living, guys.
Enjoy it. It's awesome.
Anyway, yeah. So, again, as I was talking about there, this is something we had talked about multiple weeks coming into this prior to last Monday or 2 Mondays ago, I guess it was now. About the fact that we'd had like such minimal pullbacks this entire cycle. We're barely even finally hitting 20% or whatever. And historically, we'd had these 30+% pullbacks when we got around the halving. And so we finally got it, right? We finally got it. And we find out that the long-term holders, as defined by Glassnode and what they do there, the 155 days and longer, whatnot, that they were distributing pretty heavily into the all-time high, which they usually do, just not quite to this extent. And really, what have we done? We just kind of sucked all that up, right?
Yeah. There are the ETFs and institutions grabbed all that very, very quickly. Before I comment further, I do want to mention that today Tillman is in his Del Boca Vista Phase 2 era, right? So this is, the look. And that he's committed to that particular look, Del Boca Vista Phase 2.
I love it.
It's even more so than It has little ants that are on it that are crawling around. So yeah. It's an insect shirt. It's
shuffleboard and dinner at 4:15. Del Boca Vista Phase 2, right?
I'm an
old.
He's
the youngest of us, isn't he? I mean, by a bit, right? So I mean, you're talking 4:30 dinner.
I mean, the retirement bliss down there with George's parents and Jerry's parents.
Listen, I'm the only one in the community that has the thermostat at 62. I can assure you.
So back to the issue at hand. We've known for a long time that Bitcoin holders are pretty diamond-handed folks. They understand the reasoning, the ethos, the philosophy behind Bitcoin associated with being, having uncorrelated returns associated with different methods by which traditional financial markets respond to outside forces, right? Whether it's geopolitical, whether it's financial, whether it's anything of the sort. Bitcoin is supposed to be an outlier associated with movements in those markets. To that end, the bounce back in Bitcoin when there was significant disruption associated with the commentary having to do with the yen carry trade, what that did to the NASDAQ got absolutely hammered to the tune of 20+%. Bitcoin is something that always bounces back faster than traditional markets, or at times potentially isn't as hit as hard. And I will say this, that the difference in performance currently versus the last cycle or even the previous cycle, when we do get 10 to 15 to 70% downturns in the price of Bitcoin, it doesn't stay there for very long at all. Bitcoin got down to 49 and change, and it stayed there for about 5 minutes.
Yeah.
I think on that particular day, in a 24-hour period, it bounced back to 56, right? Am I wrong there? So it went from 49 to 56 in about 12 hours. And so, we all survived the bear market of that day for 11 hours. We all survived.
We were all asleep for 9 of the hours. Here's the thing that I look at. It's probably an unpopular opinion amongst Bitcoiners, but it's just the facts. You can't argue with math. You just look like a fool. The more of a base layer asset Bitcoin becomes, the more derivative products that are created off of its ownership or its custodianship. The more that takes place, the more stable the price has to become. So the days of old where we see volatile swings of 80%, 90% moves, I think are over. So you're trading a lot of value from a trader's perspective for a lot of value in the investor side of things, because as Bitcoin continues to mature and its price continues to create tighter and tighter ranges, it's going to inevitably provide more security against more derivative assets to be created. And that's what they want. It's a product. You got to productize the math in the form of banking products. And that's what it has become. We want that. So what you're going to see, in my opinion, these are all just my opinion, you're not going to see the drawdowns like we've seen in the past. And if you do see a drawdown like we saw, here recently, it's going to have be pulled off on Saturday or Sunday night, because as the ETFs continue to build momentum, their constant buying pressure during normal hours is going to be too hard of an obstacle for people to overcome who are wanting to push the price down to accumulate positions. And so what I think is going to happen in the future is you're going to see massive movements on the weekends. Why? Well, because people want to accumulate massive positions. They can't move the price down during the weekdays as effectively anymore because of the traditional markets being involved. And that's only going to get bigger, and it's only going to become harder for them. So what are they going to do? They're going to have to pull off, these, I don't even know how correlated the fall of Bitcoin was to Hong Kong, right? It sounds like a story to me. Like why? It goes back to, like, even think about, this is still something that plagues me, and I wish somebody had the right answer or had an answer for me. But riddle me this: everything moves in unison with each other, like everything. Is there how does that happen? That has to be through systematic, automatic trading gates that have positions ready to be fired off when certain criteria are met. and it creates a chain reaction event. Because when you see one market dump on the other side of the earth and half of the citizens are asleep on this side of the earth and all hell breaks loose, that doesn't make sense. Unless there are powers that be that are driving markets down during those time periods, because that's the time period by which they can. So I don't want to sound too conspiratorial, but price movement is a product of buyers and sellers. And if you're a large buyer, which means you're a nation state, you're an institution, you're somebody who needs to accumulate Bitcoin over a long, long period of time because your position is going to be that large, you wait for these types of events. And the more frequently they can happen, the better off you are, because you're accumulating the core of your position at what you believe to be historically low prices based upon where we're going. So, having said all that, I don't know what's at play, but it didn't make me shed one tear or didn't cause me concern at all. In fact, it shows the maturing of the markets. The NASDAQ was more volatile than Bitcoin on that day.
Yeah, and you bring up that point about the traditional TradFi being involved now with the ETFs, and I mean, we only have like 165 million outflow total on that Monday. Again, so
that was just that day. For the entire week, we saw inflows, significant inflows into the category itself. And by the way, BlackRock's IBIT product did not have an outflow on Monday, did not have an outflow on Tuesday. They had significant inflows on Tuesday, Wednesday, Thursday, Friday. So, that was predictable in my mind. In fact, I put out a post that says, I put out a poll even that said, what's going to be the total inflows for Tuesday for BlackRock's, IBIT product? Because the people that are buying these Bitcoin ETFs are not, degenerate Pepe, buy on leverage, or Solana pump.fund degenerates, right? These are not the people that are buying Bitcoin ETFs. These are folks that are buying them that have been taught over and over and over and over again. When you make a decision to buy a position in your portfolio, an adult portfolio, you don't abandon that position inside of a month or 3 months or 6 months or 12 months. You've made a thoughtful commitment to that position. And when it moves in a negative direction, you increase your allocation to that position. You certainly don't sell it. So the reality is that Bitcoin ETFs as a category, something almost catastrophic would have to happen for there to be meaningful outflows from that category. And we saw that this past, couple weeks ago. It's just
forget outflows from a decision perspective, because I don't even think we're at that stage anymore. I think we're entering a stage where, why does the stock market go up? Well, you can argue the value of each individual stock, but why does the whole stock market go up? The whole stock market goes up because there's this thing called investing that's a part of every company's 401k plan, and it accounts for about 2% of the daily purchases of equities. And so you have mindless people that have not paid attention, don't care, don't want to care, don't want to be as removed from these decisions as humanly possible, that are buying stocks every day, that don't know what stocks they're buying, don't know what index funds they're involved in. It's all being managed by someone else. Well, we're in the phase where the managers get to do that with Bitcoin. And it doesn't matter. No one is calling their manager as an employee of a major company and going, hey, I want to reallocate my 401k today because NVIDIA took a dump on the market. And no one's doing that. It doesn't exist. And so the rising tide that floats all ships now applies to us, because we're in that rising tide. We're in the tide of inflation, more money getting pumped out, everything goes up in price, period, the end. And at the same time, when you have correlated values across all markets, everything goes up together. So Bitcoin is entered into this legitimate phase where it's going to be embedded inside of the purchasing plans of major advisors that don't have to answer to the tens of thousands of people that they're managing that for as an individual. They manage that as a collective group. And guess what? Bitcoin's going to be a part of more and more of those conversations. And it's going to be a natural rising tide that floats Bitcoin's price. It's going to become harder and harder and harder to move it against that natural tide. If there's constant buyers because systematically people are buying Bitcoin, no different than the reason why we've created the Bitcoin algorithm or the automation that we created. Because if you believe in the premise of buying Bitcoin as a staple, as like working out in your life because it's good for you, and you believe that dollar cost averaging over long periods of time is the methodology that gets you the best curve, which it's hard to argue. I'd have never heard somebody win that argument. Then you should be buying Bitcoin on a reoccurring basis. You should be taking, like Chris says all the time, like taking your sweat equity that you have in side hustles or things that you're able to produce income off of, and then converting that into a lot of potential upside, which is hard to find these days, especially that's mathematically proven to be accurate over a 15-year period without fail. So I think that we're on the cusp of this inevitable natural rising tide that gets baked into so many conversations and so many portfolios as a whole that we're going to see even more and more stability as it relates to drawdowns. Why? Well, because the concentration of Bitcoin being owned is going to be within those four walls versus on, Gemini or any of the other exchanges that hold them.
Yeah, so take that concept that is, absolutely true that Tillman talked about, and then bring it down into to kind of real world action. So BlackRock has announced / applied across some of their other ETFs to be able to add their Bitcoin ETF into additional ETFs as part of the strategy for that growth ETF or that whatever ETF or conglomerate. They have hundreds of ETFs underneath their iShares brand, and they are going to be proliferating their IBIT product into all of these other products as a position that can be held inside of those quote unquote conglomerate type of ETF. So it's just not going to be IBIT that's going to be buying the Bitcoin. There's going to be other ETFs that aren't going to have Bitcoin as the headline, but is going to have growth or tech or next generation or whatever it happens to be, that's going to have a slice of the need to purchase Bitcoin inside of it. So those types of ETFs are huge positions in corporate 401k allocations, pension funds, at the state level, teachers unions, police unions, all of these things. And so it will continue to happen without there being huge headlines associated with it.
Yeah.
And so that's, at a ground level, that's taking Tillman's the truth of that and showing you that it's not just, is a teachers union going to announce $100 million into BlackRock's IBIT product? No, that's not going to happen. But they may in any given quarter buy $24 million of BlackRock's growth, yada, yada, yada. And it's going to be allocating to Bitcoin because IBIT is included in some of those products. And so that will grow. That will grow for the next 5 to 10 years. And so the floor, so to speak, on Bitcoin as an asset, and then of course Bitcoin's value / price as an asset, is going to be a very, very high floor.
Well, that Sunday wick was beautiful. It was a beautiful wick. I mean, it is textbook. And so it just tells me that at least right now, the markets have determined that Bitcoin in the 40s is a steal.
Yeah.
Right. So, what's interesting about that is let's look at the last 3 cycles, right? We went from 20 to 3, right? Almost a 90% drop. We went from 60 to 17, right? Now, if history plays itself out, we're due after this bull run for a monumental move downward. I don't think it's going to happen. And that's going to be a really exciting thing to be a part of. And I'll tell you why. It's continuing to prove the thesis that I say on this show all the time, which is all of the Bitcoin that you know to date, forget about it, because that's all subterranean growth. The growth that we see now is the sprout. And it's not our sprout, it's the TradFi sprout. And they get to make the rules. They get to drive the volume the way they want to drive it. And we get to sit back and enjoy the ride and not try to be smarter than we are. And that the markets are not hard to predict over long periods of time. And the people that have now gotten involved with Bitcoin do not think in the short term. They're long ball players.
Speaking of enjoy the ride, Tillman's shirt today is the kind of shirt you wear to Disney World when you have kids and you want to make sure they can find you after they get off a ride and you're somewhere. That's the kind of shirt that you wear. You're enjoying the ride, but you want to be, your kids have to be able to find you. So you wear
the type of shirt that you wear when you know you don't take yourself too seriously and it's comfortable. And at the same time, my wife bought it for me. So I'm getting wife.
Okay, now there is the truth. Therein lies the truth. Therein lies the truth. All other thoughts and excuses are irrelevant. My wife bought it for me and the hat. Yeah.
Bibble likes the shirt. Bibble Swanee loves the shirt. So he says the shirt is great. Wear it strong. So real quick here, Tillman touched upon something that I've been really kind of focusing on quite a bit over the last, this year or so. And that's this idea of liquidity driving markets, right? And so for those of you that are watching in, there are 2 ways in which liquidity is created, okay? The first is the one that everybody thinks about, which is the Fed or whatever other central bank printing more fiat, okay? That's the one place, that's the one way everybody thinks about. The other way that that liquidity is created is by dropping interest rates. And the reason that happens is because banks create loans. It's the fractional reserve banking system, right? It creates dollars out of nothing, basically, right?
Well, let's go. Can I interrupt you real quick and go one step deeper? Because a lot of people forget the primer to that equation. Why do people borrow? Because there's good deals available, right? Yeah. So you've got to get the real estate community behind you. The real estate community controls everything essentially from a liquidity perspective. So when you have the core of the real estate community losing money on their properties based upon their variable rates going up and their rents not keeping pace, you're putting the entire economy at risk. If you lower those rates, and there's a lot of smart real estate folks that I follow that say that we're about to hit the magic number. If they get us down to 6, you're going to see money come off the shelves to buy real estate like you've never seen before. And what is that? That's just all loans from the bank. It's cash on the balance sheet for them. They can produce more loans off of that. It's good for everybody, and it is the primer that lights the fuse essentially.
Yeah. Great point. Yeah, exactly. And so, this is the thing, guys. And so we're seeing liquidity, global liquidity starting to pick up. I know a lot of people, if you look online, they've got a very terse, very upper level kind of understanding of this. And they kind of point to the Fed's M2 money supply. We don't really have the time here to go into why it's maybe not the best, calculator of what the liquidity is out there right now. But when we talk about liquidity, you want to look at global liquidity. Why? Because we are globally interconnected. Again, as Tillman was saying earlier, you got something happens on the other side of the world and we're all sleeping over here and it immediately affects us over here. There's this interplay, there's interconnection in all that. And a lot of that, especially with the U.S. market, you all may not realize, but the U.S. Stock market has a significant inflow of investors from other parts of the world because they consider the U.S. market to be the strongest. They could invest in some other the Nikkei or something in some other country, and they do it to a bit, but not to the extent in which they invest here in the U.S. stock market. So when you think about liquidity, you want to look at globally. And what we are seeing this year here, last few months especially, we're starting to see an uptick in that global liquidity. Things don't happen right away. It takes a little bit for that money to get out. But just be watching for it, because if liquidity is increasing, you should generally expect that asset prices will rise with it. Okay, and so that's your first thing you look at. It's not going to tell you exactly when tops and bottoms are going to be in there or where the little 4-hour or 15-minute movements are going to be, folks. But if you're looking for overall asset price growth, that's what you want to look at. Are we seeing liquidity, global liquidity increasing, or are we seeing it decreasing? And right now it looks like the decrease may be done and we bottom out. We're starting to get that move back up globally. And, that coming out with potentially, the Fed coming out and slashing rates a bit, it's a double whammy coming in there. It starts setting things up as we get in. So we go, okay, well, this time is different. And we're all, the three of us up here, we've been in the markets for a while. We've heard this over and over again. And usually, that's not something that you follow. But, I think Tillman's point's great that he keeps bringing up, which is this idea that especially for Bitcoin, all the growth we've had until this year has basically been subterranean, below the level, right? And now with the ETFs getting involved and Trafi getting involved and everything this leads to, now we're starting to sprout up above. And so it's a different kind of game than what we were playing prior. And, in the grand scheme of things, it's a good thing, guys. It's a good thing.
Under the guise of, the this time it's different moniker, like you said, we've been around long enough time to know the frailness of that particular argument. I hearken back to one of my favorite phrases, that history never repeats itself, but it often rhymes.
Yes.
Right. And so, financial markets are dynamic, and dynamic works in both ways. It works to the upside and the downside. So I don't think we'll ever see a real estate bust that affects the global economy the way that it did in 2008, 2009. But history often rhymes. There could be another, asset focused breakdown that affects the markets in a meaningful way. It's important to think of this too, because all of us are involved with economic factors and even the issues we're talking about here today with Bitcoin on a daily basis. But the truth of the matter is that markets have been in a fairly significant march upwards since the end of 2009. We haven't had a meaningful downturn on an annualized basis since then. That is 15 years now.
Yeah, the closest thing we had was COVID, and that was quick and
COVID was a 3-month pullback, right? You could make an argument that was meaningful, right? But at the same time, there will be adjustments. It's just that they're not going to happen in the way that we've seen them before, but they will come. They will come.
Well, here's a game theory that's pretty interesting to think about. I've been following. My dad's a gold bug. If you know what that means, he loves gold, and he has for a very long time. I'm talking about 80s, like when inflation went to 20 or interest rates went to 20%. And one of the things that's really, if you follow how monetary policy works and how you're taking a base value commodity or base level value, so corn, soybeans, gold, silver, you're taking things that have production value, use value, and you're essentially commoditizing them and making them a financial base layer like we're talking about with Bitcoin. Well, what's interesting about the way America has kind of elevated itself into the position that we find ourselves in as the global reserve currency, as the strongest military might by a factor of 10, all of those kind of things, is because we've had control of the money. And the way we've controlled the money is by inflating our dollar against a base currency of our choosing. It was first the gold standard, right? That was our creation. We said, hey, our money is backed by 1 ounce of gold. And that gave everybody confidence, right? And then we transferred it to oil. And we've now, for a very long time, based our currency value against the global oil production and it being the natural commodity, or the pricing mechanism for all natural commodities, including the price of a barrel of oil. And so we forced all of the nations to buy our oil in dollars. And we've gotten all the other countries that produce oil to collude with us in forcing that. Well, that allows us to inflate our currency against a much, much bigger asset class than gold, which provided us the growth potential and really the banking engineering and the financial engineering to provide the growth to the world that we've provided. That's a good thing, right? But we've tapped out the petrodollar. We need to move to another commodity. Well, it's an interesting game theory to think about, is if you're looking at the world's commodities that you are going to move to, Bitcoin has to be in that conversation, even if it's a fractional piece of that conversation. If you're talking about scarcity of assets as being the fundamental reason why it's included, it has to be included. If it doesn't have production value, I get it. It's not corn. You can't eat it. It doesn't have constant human value like shelter and water and food does. Yeah. But it does have intrinsic value in other ways that put it in the same category of that at a global scale. And so when you're looking at what's next, well, the financial system, we have to keep inflating. That's not going to stop. We're looking for the next commodity to base the currency against, or to market against. And I think in the future, you're going to see a basket of countries like BRICS have already talked about, pooling all their commodities together and backing a currency with that. But I can't believe that there's a universe that exists where nation states and the likes of those types of buyers don't find a hedge in Bitcoin being a part of that strategy. Because as the petrodollar gets weaker and weaker in its dominance, and as the dollar loses value against other commodities globally, we have to peg it to something else. And we have to do it to something that, has absolute math behind it in terms of its path forward. And Bitcoin has that, right? You can't change any of the intrinsic values that are baked into it without the community buying into that. So,
yeah. I mean, I think it's a good point. And that's a little bit contrary to, again, everybody's, I say it, I say it time and time again, everybody's been romanticizing the death of the dollar since the 1970s, probably even, before that. But the reality of it is, hyperinflation is, especially on something that is still used so extensively throughout the world. 85% of trade is done in U.S. dollars internationally. Over 50% of the debt held in the world is held in U.S. dollars, which means it has to be paid in U.S. dollars. That's part of it. You can't pay U.S. debt in something else. So to unwind that, I'm not saying that U.S. dollar will stay dominant forever, but I'm just saying it takes some time, guys.
I agree with you. I think it will stay dominant because I don't think it's a commodity that truly backs it at this point. I think a commodity like real estate, how does the lending take place in the United States? Well, the lending takes place because everyone has a lendable asset, because Fannie Mae and Freddie will buy up all of the assets. They'll back all the mortgages, right? So every bank in the country, you can go down and get a mortgage if you own a piece of property free and clear. That liquidity is coming to Bitcoin. And when we get that type of a liquidity, when it's seen as a valuable asset that can be borrowed against at a local level, then you're going to see people of all shapes and sizes seeing more value in it than they see in today, because it doesn't, if I don't have a lot of disposable income, what's more flexible for me, owning Bitcoin right now or owning a piece of real estate? Well, owning a piece of real estate. The U.S. government has chosen through regulation to make that easy for people. And we are seeing the same people that have set up those systems now set up Bitcoin as a base layer. So again, back to the analogy that I think Michael Saylor or somebody says, that I don't think there's a better one. If you go back in time to look at land acquisitions on, in New York, Manhattan, and you go back to the 19th century, there's no point since between then and now that you wouldn't be a good buyer. You should have bought if that opportunity presented itself to you over the last 150 years, all 100% good decisions. Well, why? Because there's scarcity there's intrinsic mathematics that are behind it that prove to maintain themselves very well over long periods of time. And Bitcoin has all those intrinsic values. So I see somebody in the chat says, it'll be a basket of things that back the currency. Could not agree more. That's the best way to do it, because then you've got diversified stability within that basket. And I think we're probably headed to that. And I would, that's kind of my premise, is it's hard for me to think that BTC isn't included in that strategy at some fractional level. I don't know what percentage, but it's got to be on the docket from where I'm sitting.
Yeah. Otherwise, what are we doing, right? I mean,
well, it just show me one better. It's like when people ask me, like, well, I'm going to sell all my Bitcoin when it hits the power law factor at blah, blah, blah. And I go, well, what are you going to sell it into?
The growth curve of, again, let's call it, Manhattan commercial real estate, or residential real estate for that matter, over the last 100 years. If you were to overlay that in a constructive way to the price and value of Bitcoin over a decade, those charts would look relatively similar. And I think they'll continue to look relatively similar because, again, it's supply and demand, and the supply is locked in a place like Manhattan real estate. The supply is locked with Bitcoin, and the smartest minds in finance, the smartest minds in acquiring value have agreed with that statement. Larry Fink, people don't think about this a lot, this next statement, and people don't realize it. Larry Fink isn't just the CEO of BlackRock. He's the founder and CEO. He started BlackRock, and that firm started from zero and has turned into the largest asset manager on the planet. Almost $10 trillion, more than $10 trillion at this point in assets under management. So if that guy, if that financial gigabrain is going on, over the last 6 months, going on every financial news show that exists, and his first point of emphasis is Bitcoin as a store of value, Bitcoin as having the type of attributes that gold has and digital gold, and talking about him doing a deep dive on Bitcoin and changing his mind as in relation to its value. And then more so than words and changing his mind, creating product inside of his founded firm to gather the value of that particular asset. I just don't see a way in which you take the opposite side of that particular trade against a guy like that, and against his history of value creation. I just don't see it.
Well, speaking of the big guys, 13F filings coming out here, and this is something we talked about the last time they came out, and some expectations we had. The big thing everybody's talking about is Goldman Sachs. 7 ETF products to the tune of $400 and somewhat million. What else you guys? What else are you seeing those at 13Fs yet? Anything? Anything interesting?
Yeah, they're going to continue to come out. And the way that 13Fs work, they have 45 days to report after the quarter ends. And generally speaking, the larger 13Fs and the larger firms report their 13Fs as close to the end of that 45-day period as possible. And we're right there. So Goldman Sachs coming out, there's going to be some other eye-opening names that have opened up positions. There were already quote unquote eye-opening names in the first quarter when these were initially launched, the Citadels of the world, the Sequoias of the world, right? Some questions about were those positions that were held, or were their trades? Goldman, very clear that these were positions that were taken because they were taken inside of the actual ETFs themselves. There's going to be some bigger names that come out, some sizable entities that will announce involvement in the space, and that will only continue to grow. The point that I made maybe a couple of days ago, again on my Twitter feed, is there has been no reduction in the size of positions that have been taken from last quarter to this quarter. That's important to note. So there's been no selling of Bitcoin ETFs at the institutional level where they have to report 13Fs. But there have been continued acquisition and new entities that have acquired. That's not going to stop or slow down for a while.
Yeah, the old adage where you can turn a speedboat really quickly, but you can't turn a big cruise ship or something like that quickly. This cruise ship took months, years to even leave the port. It's not going back to port for a long time. It's a big one. It's going to take a long time to even turn it around. You'd be able to see it turning around and heading to port way before it even made any momentum to get back to port. It's that big.
Yeah, and we got this comment here. Junie is saying Kamala is cracking down on crypto on her eco plan. I don't know. To me, I think, crypto, Bitcoin, it's out of the bag, right? It's there. I know there's a lot of, fear mongering going on. If you vote for this person or don't vote for that person, then there's going to be some, some terrible thing that happens to crypto, sets crypto back. I don't know. When I look at this now, I think Bitcoin especially, but crypto in general, I think really is just kind of out of the bag now. I think it's part of what it is. And I think, these kind of things, I don't know that it really matters who's elected as far as the grand scheme of things, right? There may be little issues along the way, but I think the grand scheme of things, I think we're kind of there.
A politician saying that they are the only thing anyone can do for Bitcoin is help more people hear about it. That's it. But the natural laws of Bitcoin are what drive its movement. It's not any human being. I wouldn't even be involved in it or want it if it was dependent upon a human being endorsing it or thinking it's cool. It's worked when no one knew about it, and it will work when everyone knows about it. And it's working in between perfectly as well. So to think that it's political in nature it's like a politician trying to claim credit for sunny days. No, it's just natural law. It's going to happen, and they like to claim credit for it. So whoever you vote for, it may change how many people are talking about it, which is obviously a good thing. But that could be if somebody's talking really negatively about it, its brightness will shine that much brighter through the negativity and the darkness, because its truth is what we know to be valuable. It's truth in the fact that it's self-custody, that it's independent peer-to-peer, that it's supported by a global community effort that's been flawless and perfect in its ledger. Like all of those intrinsic things shine even brighter when you try to put the lid over it. And so it's much better, in my opinion, for politicians, which I think is inevitable, for them to take the path of least resistance, which is to say, okay, if it's too big for us to beat, we're going to regulate it. And they may come against self-custody. They may come against some things like off-ramps that make it hard, but they're not going to come against it as an entirety. It cannot. They would have to just heavily promote the ETF and the custodial management of Bitcoin, because you can't hurt the core value. It is bigger than you. That's the whole beauty of a decentralized ledger, is that no one person or entity can ever be the entity that controls it. It's uncontrollable. It's a purest thing we've ever built as humankind as it pertains to equitable exchange of value and clear inflation rules.
Yeah. I mean, I like the way that you look at it, because it is what it is, right? I mean, we come out there and we're looking for something, right? I mean, Bitcoin didn't happen just because. Bitcoin happened because we were looking for something, right? We were looking for some way to stop the insanity, to have some kind of control over our involvement in that sanity. And so, yeah, I mean, again, when it comes to a particular, presidential candidate, I think the biggest takeaway, as you said, that we get from that is that it's being talked about more and on a bigger stage and amongst bigger people. And, that's only a plus for Bitcoin. That's only a plus there.
Yeah, well, and it goes to, I think, a lot of the Bitcoin community specifically, but really the whole community needs to remember the truths that we all bought into this because of. And I hate to equate it to, I don't want to be blasphemous at all, but it reminds me of something that, somebody told me. I'm a believer, I'm a Christian. And, I don't have to defend God. God is bigger than me. I'm not the defender of God. God has been in existence forever, and he is plenty capable of defending his own attributes and his own character and who he is. And he continues to make those things evident to humankind. Same thing applies with Bitcoin in the fact that, I could be the most popular person. If Elon Musk came out tomorrow and said, everybody, I don't like Bitcoin. It stinks. It's dangerous. It's going to get hacked. You guys should all sell it. If he turned into the biggest Bitcoin naysayer, that would hurt Bitcoin. You would see an immediate knee-jerk reaction. You'd see that. But time would prove him wrong. and time would absorb all of that bad will that was put into the cycle. And so math wins is the point. And so I encourage everyone to go buy a miner off eBay. Don't mine to make money. Mine to understand what you've bought into. Mine to understand what a decentralized network really is and why it's so powerful. And when you get to those conclusions, you then have to ask yourself, like, do I want exposure to this unique thing that I can't get exposure to in any other way? Right? Me and you guys, we could talk about land ownership, and we could all debate, like, well, I think buying land in Iowa is the best, farmland. Well, I think buying land in Miami is the best. It's got the best appreciation curve over the last 5 years. There's all these things that we could argue about. Bitcoin is in a class by itself. There is nothing that's ever done what it's done. And even there's a lot of people that love it that don't even know why they love it, because they don't know those fundamental truths. But when you find those fundamental truths out, it inspires you. It makes you think that humankind can build fair things and that we aren't destined to bureaucracy and corruption is what it amounts to. And so those, if you can find those shining examples of things that hearken to humankind's common desire to be treated fairly, right? They're unstoppable. Those forces are born inside of us. We will seek them out if they do not present themselves easily to us.
Well, speaking of, again, the attributes, which is what we do here of Bitcoin, I actually have to jump to a customer demo for thearchpublic.com. But as I leave, I would encourage Tillman, you and Chris to talk about our Bitcoin algorithm that is coming out here in the next few days. I think it's a powerful tool to allow users to acquire Bitcoin in a pretty unique way. So I'm going to sign off with that.
Yeah, absolutely. I think it's a good segue, and it allows me to speak to kind of what I'm talking about. So if you think about buying Bitcoin as part of your strategy, the question then becomes is how disciplined are you in your strategy? So if I believe working out is good for me, right, then I need to come up with a plan to work out frequently, a lot. If I believe owning Bitcoin in my portfolio is good for me, I need to figure out a strategy to buy Bitcoin a lot. And a lot of people just don't have the time. They get preoccupied with other things. There's these holes in real life.
Right? Yeah.
Yeah. You don't have the time to be, have your hand in every pot that you want to have your hand in. Like, I would love to say that I work out every day, but I don't, and I wish I did. But and if I had a bot that could work out for me, I would buy that bot. But so we've created an automated tool that you get to tell it how much Bitcoin you want to buy, how frequently and what intervals you want to buy it. It will print or send results of what time period, what the outcome of that buying strategy would give you. So it's this robust tool that allows you to look at what would have happened if I had purchased Bitcoin on every down day over the last year and a half. And if I had spent $100 a day, or if whatever you can allocate to buying. And it's essentially a tool that projects out and shows you from historical data what the trajectory of that investment could yield. And so what's powerful about it is I look at Bitcoin as something that I want to own. I want to own a piece of it. So how am I going to do that? Well, I can pick a day and go, well, today's the greatest day to buy Bitcoin, and I can load the boat and put my whole investment allocation into Bitcoin today. Or I could hire somebody to sit in front of a computer and buy it every 30 seconds in very, very small increments, or every 2 minutes, or every day, or whatever that is. But that's called dollar cost averaging. And it's the most proven way to accumulate a position without risk. Why? Because you're not risking all of your purchases in one given price bracket. You're accumulating a lot of different prices over a long period of time, which gives you a blended rate, basically a weighted average price. And so what we've built is something that will keep people disciplined in what they want to do with Bitcoin. And so they can set it and forget it, and it'll just be in the background doing exactly what you tell it to do. And we built it because I look back at my journey with Bitcoin. I found out about it in 2013. If I had had a tool like this back then, I would not have all of the wounds that now I have to lick as it pertains to not buying Bitcoin when I was fearful, selling Bitcoin when I was greedy, thinking about it as me being smarter than the markets and trying to do, the quote best thing. The best thing is not the sexiest thing. The best thing is the most boring thing. And so if you look at it like working out, you just want to show up to the gym every day and you want to put the work in. And if you do that, you have great outcomes. And if you believe in Bitcoin, and then it's that the premise is that we're taking into it is that same premise holds true, is that if you over any period of time over the last 15 years just bought little tiny pieces when you could afford it at the dips, you'd be extremely happy no matter where you fall on the curve with the outcome today. And so if we believe that Bitcoin's on that same trajectory going forward, we need to become disciplined about how we convert fiat to Bitcoin, essentially. And so that's, without talking too long about it, that's what we've built. It's something that provides you the convenience of not having to think about it or worry about it or do it every day on your own.
Yeah. So, guys, if you want to check that out, if that's what you're doing, if you're just buying Bitcoin and looking for a better way just to buy it and hold on to it, you can check the guys out here, Tillman and Andrew. They've got thearchpublic.com. Is that what that is?
Yep.
Is that correct? Okay. Yeah. And so the link will be underneath the video here as well. And of course, be sure you're following us, TX West Capital, myself there. Tillman, Texas OL 61. Did I get it right?
You got it.
Got it right. All right. And Andrew is AP_abacus. I don't know why his is so easy for me to remember.
I've known him for a long time and I still don't know his handle. So kudos to you. You got it.
But yeah, so you guys can check that out. Check them out. By the way, if you're interested in learning to trade as well, we do that at Texas West Capital. So we've got some links underneath as well for our group coaching that you can get in there. But I'm telling you guys right now, even if you're trading, I'm telling you, I do it. You should be doing. You should be finding some way to buy Bitcoin along the way and just put it away and don't touch it. Because, even when you're trading, even when you do it for years and years and years, you're still going to be wrong. You're still going to make mistakes. So, this thing, when you take some of your money and you put it in Bitcoin and you buy it and you don't touch it and you just keep adding to it, it helps make that whole situation a lot better, especially if you're newer at trading, because it's going to take a little bit to get used to it and to do it correctly. If you pay attention, do things you have to do anyway, which most traders don't. Let's be honest. That's why 3 years later, less than 3% are still trading and doing it profitably. So just some thoughts on that, guys. But as always, we do this every Wednesday. We love having you guys check in here. Hit the like, hit the follow, follow all of us there on Twitter or X or whatever you want to call it. Follow the channel here. Leave a comment. Let us know what your thoughts are. If you have a question for next time, something you want us to address, leave it in the comments. Leave us a question. We'll be glad to address it because, our goal here, guys, honestly, our goal here is just to help you get out of the price is the only thing that matters mindset when it comes to Bitcoin. We're trying to get you to understand that there's more to it than that. We're trying to get you to understand this is how things change, right? Historically, this is how things change. And so we would just like to kind of give our thoughts out there and keep getting you guys thinking and getting beyond just the price point in that. So that's it. As always, guys, remember the only thing you control in the markets is how much you lose. So if you're in the markets, risk management is where it's at. If you're ignoring risk management, then that's probably why you're losing a lot of the money you're losing. So get serious with it and do it. But other than that, check out the guys here, check out their company, and check out my company. And man, oh man, well, I guess we'll see you guys next Wednesday, all right? Everybody take care. Thank you so much, Tillman.
You too. Have a good week.
All right, take care, everybody.
Bye.
Oops. See if I can get this over here. There we go.